come into the space and want to have their own piece of land, the demand or the price of these things really start to rocket. So what can you do with these digital assets? What can you do with these lands? You can rent them out, you can develop experiences on them. They are called experiences because they specifically relate to, right now, gaming type of experiences. But as adoption kind of starts to drive in this environment, you will then see more applications come in. So it is something new. We've seen a lot of major corporations and brands start to identify or associate themselves with certain metaverses, such as the Sandbox, Blocktopia, and what have you. And last year, a piece of land in the metaverse sold for approximately $14 million. So we've got a fund called the Metaprop Investment Fund where we speculate on these digital assets. It's something that is quite high risk and something that is quite new. It's not something you necessarily want to get into and get out very quickly. It's more of a long-term view. The metaverses that we look at within this fund is the Sandbox and Decentraland, which are the most popular ones. We then look at the other side, which is owned by the Bored Ape Yacht Club. If any of you know about NFTs, Bored Apes are approximately $100,000 today. They were $350,000 2 months ago, and this is their metaverse that they've launched now during the month of June. We also look at Blocktopia, which is a brand new metaverse to come into the space. It's where PlayStation, Xbox are building a lot of experiences around, and because of that, we see it becoming quite popular going forward, right? The ownership in this fund is given in the form of an NFT, and as I mentioned to you, it is something highly speculative. Investing in the metaverse is not something you want to put your life savings into, but it is something that you should consider in terms of the digital growth that we are seeing in this environment right now. Any questions?
In terms of demand versus supply, what's stopping metaverse continuously being created in land, virtual land, continuously being supplied for price dropping?
So the metaverses that are currently in existence right now have a limited amount of land, right? Sometimes they don't release it all at once, they release it in phases, right? So for example, the Sandbox, right, has, I think it's about 100,000 land parcels, right? From there, they've approximately only released about 60 to 70,000, right? So there's a finite amount in terms of what they will release, right? It stops nobody from coming in the market tomorrow and opening their own metaverse and selling their own land, right? So where the value kind of comes from is dependent upon the users and the activity within that certain metaverse, right? So for example, the Sandbox and Decentraland have something like 2 to 4 million active users per day, right? Whereas other metaverses might have maybe just 1,000 or a couple hundred or what have you. So it's about looking at the data and understanding where is the traffic going to, kind of like a website, right? So that's one aspect. The second aspect comes down to what experiences are being built within those metaverses, right? Because you, as a user, right, you going into the metaverse, you're walking around, maybe you got your goggles, whatever it may be, you're looking for something to do, right? Something to do could be a game. It could be an art exhibition or an NFT exhibition, something like that. So dependent on the experiences that are being built. So the Sandbox recently sold a portion of land to Gucci. Gucci is creating their own digital vault within the Sandbox, which means if anybody wants to visit that vault, look at the latest trends or whatever it may be, they have to specifically go to that metaverse. Where we kind of see the sector going is that eventually we'll have something called interoperability, where you'll be able to jump from one metaverse to another. It's not existent at the moment. basically because they're all competitors for one another, right? But that is something that will come down the line. Eventually, you'll be sitting at home, you can go into the metaverse and meet asset managers like ourselves and discuss what options are available for you from an investment perspective. So, although it is something high risk, although it is something new, we believe this to be a major sector in terms of what is coming in the future. I mean, you guys have seen through COVID what has happened with Zoom calls and what have you. Now, these environments could, for example, essentially move into the metaverse, where Zoom could have a virtual campus, or, for example, a university could have a virtual campus where you go to and learn. And essentially, it's the same thing as jumping on a Zoom call or an online lecture, but now it's your avatar within this metaverse.
Could you explain why Gucci wouldn't develop its own metaverse? Why does it go through Sandbox?
So,
Why is their platform so much more?
sure. So Sandbox and Decentraland have been the first movers in the space, right? And because of that, they have a lot of traffic, right? So it's not only Gucci, it's Adidas, it's Christie's auction house in the UK. It's quite a lot of these companies, right? So what happens is essentially they choosing, do we want to be here, do we want to be there, right? If they go and open their own metaverse, right, the experience that you will get will be limited to what they are offering. So if they are offering only, for example, clothes or concepts or whatever it may be, the people that go there are going to be limited, right? For example, if you're opening up a Gucci store in Times Square, right, you're opening up there for a reason. There are people already there. So similarly, in this case, they are looking for the traffic and the adoption to open in a place like that so they can get that traffic. Does it answer your question? Yes.
How's it, guys? So I see the form of ownership is given through an NFT.
That's correct.
How is the return on investment processed? Is it only once the sale of your NFT takes place, or do you guys have any other method of doing that?
Sure. So basically, the NFT that we give is essentially like a share certificate, right? So the fund itself will have a certain amount of assets under management, right? That would be land parcels in different metaverses, for example, right? So essentially, when you invest with us, that is your instrument, your ownership instrument, right? Now, when it comes to monetizing that, basically it works in the following way, right? So the land parcels that we buy, right? The market price, right, is publicly available on a platform like OpenSea, right? If you go to OpenSea, you go to the Sandbox, you will be able to see what the floor price of those assets are, right? So you'll be able to see Sandbox, the cheapest piece of land, for example, to Ethereum or something like that, right? So that is where we get the capital appreciation. Obviously, there's certain factors that come in with regards to how valuable is your piece of land versus someone else's, right? So that is where location comes into play. Who are your neighbors? How close are you to, for example, areas that people enter the metaverse in, right? Because you're entering in a certain space, what's around you is quite popular, right? And that's kind of where the demand comes in with regards to the capital appreciation of your specific piece of land, right? Secondly, you can rent out your piece of land, right? So although that is still in the early stages, as adoption kind of increases into the space, right? You'll have people that essentially won't be able to afford to buy their own piece of land, right? Because of that, you can then rent out your piece of land to someone that's looking to build their own experience on your land. For example, and this is just a simple example, let's say you have a supermarket store like Woolies or something like that, right? Now, you can already shop online, but opening in the metaverse will allow that to become visual. You can actually walk through the aisles of Woolies from the comfort of your home, choosing what you want, and that will be delivered to your home, right? Now let's assume a company like Woolworths can't afford to buy that piece of land. I know it's a silly example, but you guys get where I'm going to. If they cannot afford to buy that piece of land, you can then rent that to them. So the whole point here or behind this fund is to identify these certain metaverses that will have quite an uptick in terms of adoption down the road. And buy those pieces of land today when they are still affordable, because as time goes on, they might not be, right? And obviously certain platforms will now become obsolete, so the value can actually go down. But the whole point is to be in spaces that have a lot of traffic and a lot of adoption.
Perfect, thanks.
Cool. Any other questions?
Being an old timer like myself, this is all very new to us. My question is, how do you visualize a sandbox event? How do you see a sandbox? What's a sandbox about doing?
So think of it as a game, right? Specifically a first-person game, like a first-person shooter game. You know, you see the guy with the gun and he's walking through, something like that, right? So essentially that's what it looks like. So when you enter, they ask you to create an avatar. That is a digital representation of yourself, right? You do not need virtual reality glasses or anything to go inside this place, right? You can do it from your laptop or from your computer at home, right? Once you get in, it's a digital world, right? Everything kind of looks like a cartoon, right? If I had to explain it to you that way. But there are people who spend so much time gaming within these metaverses, all of that. They literally spend hours within it, right? And this is where the digital economy comes into play, where so many people are spending so much time within these metaverses, right? There are ways to monetize yourself, right? You can assist other people with services. You can walk up to someone on the other side of the planet, but he's in front of you in the metaverse. You can have a conversation with him. You can network with him. There are events like, what was it? Ariana Grande or Justin Bieber held virtual concerts within the metaverses. This was like last year, December. So it's something where people from different parts of the planet can essentially come together to do certain things. But and not monetized by fiat currency, US dollars, all of that. Everything is cryptocurrency. So most metaverses have their own native cryptocurrency, right? But on the platforms where these lands are traded, right, they usually trade in Ethereum, or for example, USDT, which is a US dollar-backed coin. So does that answer your question?
But to see when you're in, can you see, can you have to visit these lands? You put on those goggles?
You don't have to put on the goggles, so think of it as walking through, like what you see here. There are buildings, there's roads, there's grass, there's rivers, it's your imagination. Some things you can't build in reality, you will see them. Cool. Any other questions? Great. Let's move on.
So when citing stocks as an asset class, we thought to take advantage of an emerging trend in the industry of wealth management. As of today, there are 100 robo-advisors across 15 countries, and South Africa is home to the first and one of its kind Wealthface. Wealthface is the next generational financial advisor, giving investors access to fractional stocks, and the enablement to invest in autopilot and build custom portfolios using an analytical factor investing tools. This is custom to your financial needs. Wealthface Invest encompasses a tailor-made investing solution to your needs and financial goals. When being onboarded as an investor, a digital questionnaire dictates a risk profile with a diversified approach to ETFs and stocks that is a passive form of investing, like saving for retirement or a child's education. And research has proven that passive investing, tracking the market over time using a diversified portfolio, is the most reliable way to grow your money over the long term. I'll give you a simple example. If you invest $100 every single month from the age of 25 to assuming you're retiring at 65, you would accumulate, just by saving and investing, assuming an average rate of return of 5% per annum, $350,000. But yet, if you had to start that investment and saving journey from the age of 35 to 65, meaning starting 10 years later, you would come up with $294,000. What I'm trying to emphasize is that 10 years of saving and investing will give you an additional $55,000 on your portfolio, which is quite interesting, and that really talks about long-term investing. Our second product, Wealthface, is Wealthface Trade. It's a self-trade platform giving you access to trade fractional shares at minimum amounts. On our trade platform, you can build your own customized portfolio and baskets of assets, and this allows you to diversify your approach to trading. So usually, if you'd like to go out there into the market or buy stocks like Apple or Microsoft, and Apple costs $1,000 per share, instead you can buy that stock for $10 a share and still benefit and reap the rewards from dividends and any capital appreciation. To add on, our analytical tools in factor investing at your fingertips enable you to make informative decisions. And this differentiates ourselves from the market. Of course, you can head over to the next slide. Of course, something that is now extremely close to our hearts, what we like to call Mafaza, which is halal investing. A first of its kind in South Africa and predominantly around the world, which is focused on halal portfolios and halal trading. These topics are Sharia compliant and don't see revenue from interest, gambling, alcohol, weapons, and the like. Therefore, suited to your beliefs. To give you a third idea of what factor investing is, it is I think the best is to show them the video.
Welcome to Wealthface Trade, an online trading platform accessible to everyone, everywhere. No need anymore to trade based on news or technical analysis. Wealth-based trade allows you to build your own portfolio and removes emotional bias. With our smart beta systematic solution, you can build a factor investing-based portfolio backed by Nobel Prize-winning academic research. You can build your portfolio now with the number of factors you prefer, the number of stocks, and sectors of your choice. We offer you access to multiple stock exchanges in different countries, like the United States, the United Kingdom, Canada, the United Arab Emirates, and the Kingdom of Saudi Arabia. And you can also rebalance your portfolio monthly, semesterly, or yearly. Oh wait, we did not forget to offer you the Islamic halal trading option to trade based on your beliefs. You can start trading like a pro with a simple fingerprint. Wealth-based trade, the new face of trading.
This is an extremely exciting product for us that just went live this week. It's now available on the iOS and Android stores, so I encourage all of you to get on that and download it and start investing with us. Just to give you an idea of what else you can gain from Wealthface, our learn options, which allow you to get accessibility to set goals and monitor your portfolio in real time, giving you complete control, transparency, and agility with your investing. You also have access to our education and retirement calculator, which will give you estimate values of how much you need to save and invest for retirement or a child's education.
If I could just step in here for a minute, I just wanted to reiterate the point that, when we're in South Africa, we're so used to trading shares on the JSE and local equities, we don't necessarily look at offshore equities, right? So Wealthface is a product that essentially allows you to invest in the US stock markets and other markets, right? It's also not derivatives. So what you're buying is the actual shares within those companies. You are entitled to dividends. Two products, just to summarize, you can trade by yourself, choose what to buy, what to sell, if there is something for you. If you are not a trader, we have something called investing in autopilot, which essentially you fund your account, you can select, for example, which industries you might have an interest in, like whether it's electric vehicles or renewable energy, whatever that may be, and the platform will invest on your behalf. If you're unhappy with the returns, you can stop, change your strategy. It really puts a lot of power within your hands as an investor, whether you are used to investing or not. I hope that makes sense. Are there any questions?
fund management in Ella Asset Management. And I just wanted to, is my working?
Yeah.
I just wanted to firstly say and just make a point here that we actually invest for the long term. As you can see, investing is a marathon. You know, it's not a race in particular. I mean, a lot of guys when they have a toothache, you know, they go to the dentist to get it sorted out. But everyone, for some reason, thinks that they're genius in the market. Consistently going online, buying stocks, selling stocks, and they don't know the reason why. And you ask them the reason why, and they say, I like the stock. It looks like it's going to go up. I think it's going to go up. I hope it's going to go up.
My friend says.
My friend says. I don't know what that really means, because the market doesn't care what I think. The market goes in a certain direction. So as such, you know, we structured a few funds to suit that criteria, you know, where what is referred to as delta neutral. Now, delta neutral sounds complex. It's a word that the bankers made up to confuse the retail guys so they can make all the money. I'm just kidding. But besides the point, our first fund, or our first popular trade that we started off with is the arbitrage trade. Now, the arbitrage trade is a popular trade in South Africa in particular. It's been going on for a couple of years now. What we've managed to do is we basically managed to package it for investors, individual investors, who have a certain risk tolerance, more towards the lower end. If you are an investor that doesn't like to take on much risk, the arbitrage trade is obviously a good trade to stick your hands into. So how does it work effectively? So every South African, at the moment in South Africa, can take out 1 million rand as part of their single discretionary allowance. That is allowed by law, it is allowed by SARB. In addition to that, every South African can also take out 10 million rand by applying to SARS via an FI application. So that's the one component to it. What happens is, and what we do on the desk and what we manage is, we take your money from you, we buy cryptocurrencies offshore for you, we bring the money back to South Africa, and we make a profit. Now, every trade varies in profit. Nothing is consistent. But the capital is protected. And the reason why the capital is protected is because there's two sides to the trade. The one side is we have to buy dollars offshore. The second side is we have to liquidate the crypto pairs in South Africa. Both sides are locked in. So the buy side and the sell side are both locked in simultaneously. Hence, each trade makes between 0.75 to 1% per trade. So let me give you guys a simple example. You're an investor. You've got 100,000 rand to invest. You don't know where to put the money. You meet me. I tell you, do the arbitrage. But anyway, that money basically effectively goes into a bank account, which we create for you. And based on your allowance, that dictates the number of trades you have. So let's say you put in 100,000 rand today. If you've got an allowance of 1 million rand plus 10 million rand, that equates to 110 trades. If you're doing 1% per trade, that equates to around 110%. But now remember, the maths changes as your capital grows. So if you're doing 500,000 rand, hypothetically, that amounts to 22 trades. So therefore, on each trade, you're making approximately 1%, that amounts to 22%. Law of large numbers. The higher the capital goes, the lower the ROI. That's consistent in investing. If you read in the media and the articles, this has been the most popular trade, even though it involves cryptocurrencies. We also do not use Bitcoin anymore to do this trade. The reason why Bitcoin is a very volatile asset, and while you do the trade, there's a chance that you could have a capital loss. So as such, we use something what is referred to as a stable coin. So what is a stable coin? A stable coin effectively is a coin that is backed 1-to-1 with the dollar. So for every one stable coin that is issued, there is $1 backing. So a stable coin is basically $1. $1 is X amount of rands, and that gives you the arbitrage. A lot of people ask, why does this exist? Why does arbitrage exist in this market? Well, the main reason it exists is because of a liquidity mismatch. Basically, there's more demand for crypto assets offshore than there are in South Africa. And then there's something that is referred to as capital controls. In South Africa, you obviously can't take out a certain amount of money every year. Or the amount of money you can take out is very limited. It's limited to your allowances as an individual. As a corporate even, SARB has put very strict guidance and guidelines as to how much money you can take out. Therefore, the spread and the strain exists. So that's the arbitrage in a nutshell. Any questions?
If I could just ask, how many people here own cryptocurrency? How many people are aware that in South Africa you pay approximately 2 to 3% higher than the offshore price? Okay. How many people here have done arbitrage before? Okay, not in the trade.
Not in the trade. So I think what I'm going to do is I'm going to take questions per fund as I explained. So is there any questions on arbitrage in particular that I can take? Yes.
So you can't do frequency. You're limited to, so for example, if I give you 10 million, right? So I'm authorized by Reserve Bank to take 10 million in foreign currency, is basically what you do. So which means I can only turn that money once a year.
Yes, that's
That's
correct. Unless you have SARB approval to take out more money.
Yeah, so which is in fact 100,000 and I'm making for the whole year.
Yes, on 10 million.
Yeah.
But obviously, this trade is more suited for that investor who is between the bracket of 100,000 to $1 million. After $1 million becomes inconsequential because you're going to get higher rates somewhere else if you do the math. You know, 2 million, your return diminish over time.
It would be nice if we could
Yeah.
round trip at the same time.
Yes. So that's the holy grail.
That's exchange control regulations. Yeah, but look, what some of our clients do is, for example, if you, as a husband, finish your allowance, you can then do it under your spouse's name, and then potentially under your children's name. So there are ways to kind of maximize that, but every year on the 31st of December, your allowance for that year resets. So you are then able to then continue the following year. So just to mention, what we like to do with our clients is essentially complete the arbitrage at the beginning of the year. And once they've done their allowances, to then move their funds now into some of the other funds that Joe is going to explain to you about next.
I got a small shed.
Okay, so our next funds are what I actually call an alpha fund and the beta fund. So obviously, coming to your point, actually, this was the reason why we created these funds in particular. So due to these mismatches and these differences in demand and supply, certain crypto exchanges were trading at, let's assume Bitcoin's at $30,000 and using the crypto exchange FTX, Popular Exchange, and maybe Binance is trading at $31,000. There were small price discrepancies. Now the reason why those price discrepancies exist is because there's higher demand on one exchange versus another exchange. So what we did basically is we developed institutional grade infrastructure to take advantage of those discrepancies. And how do we take advantage of discrepancies? Well, that's because we basically are allowed to transfer crypto between exchanges at a much faster speed than what a retail investor or a normal person would do. So that's our advantage, and that's how we set up this fund basically. So effectively, we've tiered them into the alpha fund and the beta fund. The alpha fund effectively is more for your high net worth individuals. The returns are a bit higher because as you grow your capital base, your transaction fees drop and you get a higher ROI. On the beta fund, we tiered it more for people who have less affordability but also want to maybe try and test it and get in as well. And the minimum investment there is 100,000 Rand. So it's effectively, again, the word is delta neutral. We don't take on too much risk. On the risk side, I would say it's between low to medium. The risk of loss is very low because we always hedge ourselves and we take a lot of trades on a daily basis. And yeah, it's basically back tested, it's robust, it's a proper system, statistical, it's more mathematical, it's not based on instinct, it's not speculative. That's basically the simplicity of it. Any questions on these funds?
What's your return? How long is the fund been?
This one is being listed now for 18 months.
And so far the return track record year on year, cash on cash?
It's between, so on the Alpha fund, it's between 12 and 15%.
It's a yearly.
That's yearly. Yeah, that's yearly. On the
After
base,
fees.
after fees.
It's a net return.
Yes, yeah. On the beta fund, it's between, I would say, 11 to 13%, roughly, after fees. And the reason why is because the capital makes a difference. So if you've got capital, bigger capital base, your transaction fees are lower. Smaller capital base, your transaction fees are higher. R1 million basically fills that gap because it allows you to take on, you do more transactions and you pay less fees, basically. The number of transactions fees. Correct.
So the annual fee basically is
USDT.
USDT.
Or dollars. Or dollars.
Just to reiterate what Joe has mentioned is, for example, if you want to buy Sasol shares, right? Sasol shares comes from the JSE. There is one fixed price. With cryptocurrencies, because of its decentralized nature, right? Prices tend to be around the same price. But what you see is, for example, an exchange in the US versus an exchange in Europe might have a slight difference. So, for example, $20,000 versus $20,100, right? Now, the reason why I'm reiterating this point is to mention that these funds are not speculative by nature. We are not betting on the price of Bitcoin to go up or down, right? What we are doing is kind of exploiting a structural difference where we are seeing differences in prices, buying at the cheaper, selling at the higher. This happens very fast, it's high frequency trading, but the reason why it works well in both bull and bear markets is because it's a structural inefficiency rather than a trending environment.
It's trading on platform conditions.
Exactly.
Price dislocation.
Exactly. And it uses, if you guys know what is the Lightning Network, it uses the Lightning Networks to move funds very quickly between exchanges.
If you're trading the platform conditions, you relying on the fact that your model is pricing the underlying correctly.
Correct.
Just to expand on that, go to the next slide. Here's a popular trade, right? This is just an example of a trade, like a structure that's inefficient. So what used to happen is you take Bitcoin and you buy Bitcoin with Ethereum. So you buy Ethereum with USDT, you buy Bitcoin with Ethereum, and you set it back into Bitcoin. This is referred to as triangular arbitrage, right? Now this sounds, and this looks very, very, very simple to do. It's not simple. It's highly, highly complex. And you need an infrastructure for this. Because as a retail investor, the moment you start transferring your Bitcoin back to USDT, it can take hours. And sometimes the exchanges give you errors because they get backlogged, and then buyers will issue maybe an announcement, withdrawals are dropped, and you've got a liquidation cascade. A lot of issues can happen. So you need obviously the correct institutional infrastructure to accomplish such inefficiencies. And these are just one of 100 that exist. This is just a very simplistic one. But there are more complex ones that exist, and we basically strive to try and take advantage of this complexities.
So this still falls under exchange control regulation.
No, this is not falling into exchange control regulation.
So I can trade as frequently as
So
I
you
want.
fund your account with USDT as we mentioned. That USDT you can buy locally, you don't have to buy it offshore. And essentially, because it already exists within the crypto realm, there's not necessarily exchange control limitations with regards to that. So it becomes very easy to be able to move between different exchanges. With the arbitrage, like
Once you do USDT,
once you're in the crypto sphere. So the difference between this and arbitrage is taking advantage of geographical differences in price, specifically unique to South Africa, right? And because of exchange control regulation, that difference in the price exists. But with something like this, there's no fiat or rands or dollars involved specifically. It uses cryptocurrency like USDT or USDC and essentially trades this triangular arbitrage between different pairs on different exchanges.
Always crypto to crypto.
So everybody, all investors are investing that are involved in this space arbitrage. So their systems become faster and faster. So how fast is your system?
So
It's Formula One.
you must remember now,
Like SpaceX.
that's a very interesting question. And how the guys do it, how effectively they used to do it back in the day was you had someone called a high frequency trader. And basically, you've got the New York Stock Exchange, which is in New York, right? So it's there in New York, the building is in New York. No one knows that the actual trading happens in a data center in New Jersey. So you go to New Jersey, the data center is there. Now, how the institution used to work is, I had to put a box close to the data center of the exchange. By doing that, I would reduce my latency. Effectively, what latency is, it's the time it takes to execute my trade. The big hedge funds like Citadel rented huge spaces inside those data centers. They put their boxes and their machines there, and they achieve low latency. What happened with cryptocurrencies is there is no real data center that exists anymore in the space. It's all what is referred to in the cloud. So as such, when you talk about speed, I know what you're saying, but it's more about technique than speed. Because just remember, each of these currencies on a different blockchain. So Ethereum is on the Ethereum network, USDT also is on the ERC20 network. I can move USDT through Tron, I can move it to other networks as well. Bitcoin is its own blockchain. So the level of latency you require in the cryptocurrency space is much lower than in traditional markets. So that's why with speed, we are very quick, but it's not only about speed. It's more about which blockchain you use, liquidity, agility, which exchanges you have, whether your bridge is good, etc., etc. So there's more to it in the crypto space, and that's why these inefficiencies effectively exist, basically.
So can it happen that you're halfway through the trade and that platform is closed?
Very difficult to happen because the way we do it is it's being stopped. So already our system will tell us, okay, cool, here's the 0.03% inefficiency. Immediately you already have, so it's not to give too much away, but I mean it's basically speed, right? So if you have a 0.03% gap, we already have a certain amount of liquidity on different exchanges. So we're already there in the process to buy and sell quickly. So we don't need to obviously.
It's very easy to start exploiting those gaps.
Yeah.
Gaps.
And we're not waiting for 1% moving the underlying. As Joe mentioned, we're looking for 0.3%. So because it's high frequency, it's taking maybe 100, 200 trades a day, right? But these trades are obviously small values, right? What's the maximum fund risks per trade? Maybe like
3%.
0.3% of the portfolio. So it's taking multiple small trades across various different pairs continuously.
Just remember also, just to add with this, guys, this isn't predictive. In other words, I'm not speculating and trying to say, listen, Bitcoin's going to 10x from this level, as such I should buy Bitcoin. This is a fund that doesn't predict, it's not predictive in nature, it's not speculative. It basically looks at spreads and tries and find gaps in inefficiency and takes advantage. Obviously some days there aren't, and maybe as a gentleman over there said, one day when you wake up and too much money comes in the space, all of this will disappear. It's very, very possible. It's just that this market is so fragmented and each exchange is just so different that I don't send an order to one particular exchange. I have to choose my exchange to trade on. So I can't aggregate my orders the way they do it with stocks and bonds and stuff, which makes the inefficiencies better. Now, unless they solve for that problem and the regulation comes in that allows me to segregate all of the exchanges together and make it one with one broker, maybe then in that scenario, the inefficiencies disappear.
That defeats the purpose of cryptocurrency.
That defeats that's centralized.
Any more questions?
One more. So I just want to ask, what's your guys' reasoning for using USDT? Because we all know that there is some concerns to USDT.
Yeah, I knew I was going to get that question.
I debate this every day.
We had that conversation plenty of
Yeah.
We have the conversation in the car. No, so USDT at the moment effectively is one of the only bridges that allows you to move between exchanges at a faster pace. So until basically what has to happen is every exchange has to move to a different stable coin like USDC to allow it to move quicker due to liquidity. So as you guys know, USDT is probably the most liquid stable coin there is. And the reason why is because a lot of the demand in USDT comes not only from trading, it comes from invoicing. I mean, in Thailand, they invoice in USDT. Asia, they invoice in USDT. There's other offshoots of demand that exist in the USDT market. It allows liquidity, it allows me to move in and out faster.
It's even a hedge against Bitcoin, right? I mean,
Yeah.
people sell their Bitcoin when they think the price is high, sit in USDT and then buying it at a lower price just to get more, right?
Having said that, though, there are risks, and we are looking to transition into something like a USDC. But for the purposes of trading and for the purposes of moving in and out of exchanges at the moment, USDT is a highly liquid currency. That's why a lot of the exchanges pair their coins to USDT. So that's why it makes it also more convenient to do that.
And just one more follow-up question. Do you guys have a system in place to protect investors from depegging? So something that could automatically transfer USDT to USDC when they see it starts to depeg?
Yes. And we developing stronger systems around there as well. 100%.
Thanks.
So we had a question up there.
Oh, sorry. So, I see that this framework of the model is heavily built on triangular arbitrage, and there's many forms of arbitrage. Triangular arbitrage being the one where you're forced to place the seeds. So, of course, mortality, it's the instantaneous rate of your currency change your price. What made that the cornerstone of this model, hearing it now being implemented in practice? Why was triangular arbitrage the announcement?
So triangular arbitrage is basically just one trade, basically. That gets done. Triangular arbitrage is the most common out there. It's known. So basically, there was a gentleman named Yale Hirsch who used to work in currencies. And what Yale did in the 70s was he basically found that if I sell the Japanese yen into the pound and I sell it back into the Deutschmark, I'll make 0.03% of the trade. So he popularized it basically. Now going forward in time, because cryptocurrencies are, well, some people call it a currency, some people call it an asset, right? Exactly what happens is there was much easier ways due to lack of liquidity to do it in a triangular fashion. If you look at 2017, this particular trade, you could have made 4 to 5% at a time. Obviously, as more liquidity came in, the ROI dropped because more people are doing it, and the more people that come in, the lower the popularity. But triangular arbitrage has been around for years. It's been around from the 60s and 70s in different markets. It's just now it's been applied to the cryptocurrency markets effectively due to the lack of liquidity, due to the fragmentation, due to the different exchanges that exist out there, liquidity profile, etc., etc.
If I could just add also, this diagram is essentially just a way for you to conceptualize the operations of the fund. So the kind of strategy that it uses. It's not necessarily the trade that we're taking all the time. It's just
Please don't try this trade.
So it's just to conceptualize kind of how it works in terms of moving between different pairs and come out with a profit at the end of the month. Answer your question?
John, in your view, the algorithms and machines limit that government?
Yes.
How long will that happen?
So what the algorithms do, or what the machines do, or what the system does, it just points to this location. Remember, it's like,
And they'll close at this location.
no, so it's like, the way I like to explain it is you've got how many, 150 plus countries in the world, right? If you want to know which country has extreme weather conditions, right, you're not going to go manually by yourself in today's time and look and say, listen, Africa, this country in Africa, you obviously write the code for yourself and the code will tell you, okay, these countries have extreme weather conditions, I should focus on this. That's the reason why the algorithm is in place, to point out these dislocations and try and address them so that we can take advantage of them.
How many exchanges or locations are
So it's actually quite interesting because in cryptocurrencies, and I don't know if people know, there's actually 250 exchanges or 250 plus exchanges. What happens is a lot of these exchanges publish volume, and they publish volume that's very high and doesn't make sense. So as such, what we had to do in particular is we had to vet every exchange to see if the volume that was traded on those exchanges actually existed. And when we found out that the volume of some exchanges don't exist, basically those exchanges didn't have any operations. You put your money in there, they shut down, 404 error, nothing happens. So we had to actually vet and try and say, listen, from these 250 exchanges, these are the ones we have to use. Having said that though, on a given day, can be anywhere from 10 to maybe 60 exchanges. But now remember, it's not every exchange that exists out there. We have to vet them because a lot of exchanges in today's time, as you can see in the media, they publish volume profiles that don't exist. And yes, such the arbitrage or whatever looks lucrative, but it doesn't, it's not really that lucrative. So we've got a system in place that sort of does a mini audit and vets every exchange before we use it effectively.
Stress testing, yeah.
And effectively looking for illiquidity.
So how do you deal with the tax and regulation issues? If I invest in your company in arbitrage and I make profit.
So the way the current system is structured is SARS has issued directives around cryptocurrencies, but there's no obligation on the asset manager at this point in time to issue an ITPP or ITPC certificate. In other words, when you trade in the fund, basically what happens is the onus or the burden of proof lies on a taxpayer to disclose the taxes. So effectively what we're saying is the taxpayer at this point in time has to decide whether they want to disclose it or not. We can't give advice at this point. 6 months from now, SARS will issue a directive where we will be issuing certificates to investors who obviously need it for their e-filing or whatever. It's just at this point in time, SARS hasn't issued any directive regarding that. So if you read between the lines, this is what they say, it's the onus is on the taxpayer. So if the taxpayer is investing money in earning, the onus lies on them effectively.
So it's tax free.
I wouldn't say that.
So just to jump on to
You're
what
not
Joe was
disclosing
saying.
it then. It's tax free.
Just to jump on to what Joe mentioned is,
Anyone from
remember
South?
once you in coin, right, you essentially, it's about when does it trigger the taxable event, right? So that taxable event, for example, I mean, guys have had Bitcoin sitting on Luno now for years, right? But they haven't been taxed on it yet because they haven't sold it, right? It's unrealized profit, right? So with USDT, for example, your returns in this fund are being given to you in USDT. If you're sitting on those dollars and don't sell it until whichever point in the future you decide to, that essentially triggers the taxable event, right? So there's a big gray area with cryptocurrencies in general and their tax treatment, right? And it's been differing with different locations around the world. Some people say it's an asset, some people say it's a security, some people say it's a currency, right? So until that gets finalized, right? So as Joe mentioned, in the next 6 months we'll have some form of directive. To be honest, my opinion is that directive isn't even going to cover all cryptocurrencies. It might just touch on Bitcoin or Ethereum, for example, right? So until that clear directive is there, the way we see it is that if you are in coin, you're not triggering a taxable event until such time in the future that you do sell it.
That's why, like we literally said with our tax experts, and the only piece of evidence they have is case law. That's the closest to give you a directive on this. So you have to go to case law in Income Tax Act. It's like some kind of, it's somewhere at the back on page 750, somewhere around there, and it gives you the closest regulation precedent that applies to cryptocurrencies in today's time. That's the best that SARS has done thus far.
The nice thing also is that because these returns in this fund is in USDT, just by investing in this fund and keeping your returns in USDT, you are essentially in dollars, right? So for those of you that have concerns about the depreciating rand and what have you, remember the nature of this fund is essentially you saving in dollars, right? So that can be quite beneficial in terms of what is going to happen down the line with regards to our currency and our economy. It's something to keep in mind.
Any more questions?
I think did we have one on top there?
Our final fund is basically a currency fund. It focuses, so this fund actually was an internal fund we had with the firm where we traded institutional money and our own money with, because it was the strategies used in this fund are of institutional nature, and then obviously as we went along, we decided to offer it to the retail audience out there, sort of give them a try and a go and see how it performs. This fund is more on the speculative side in nature. It trades the G7 currencies. It uses a mixture of fundamentals, technicals. The fundamental research is very, very in-depth, proprietary. A lot of it is proprietary to us. The technical setup and the technical side of it also is very proprietary. A lot of statistical arbitrage, meaning that you look at historical data, you try and fit it best to the current time. Proper risk management. This has been, to date, our best performing fund this year, compared to the other funds. It is more speculative in nature. It thrives in volatility. As we can see this year, the markets have been down. The S&P is down 23%. The Nasdaq is down 35%. This fund has been up. It's been performing very well. But it is high risk. And I think what investors forget is that not everything can be delta neutral. Some things require a level of speculation. But if you want return, sometimes you've got to take that risk. So yeah, liquidity also with this fund isn't really much an issue because currencies are highly liquid pairs. So I mean, due to that liquidity, there's no issue for us to go in and out quickly from one pair to another effectively. So if we have any questions, fund.
Just based on the Forex fund, I think we're quite an interesting time at the moment where if you look at the macro environment and rising interest rates, what I'd like to point your attention to is that different countries are taking different approaches towards managing inflation, right? Some countries have been hiking interest rates quite a lot. Other countries like Japan, for example, have been trying to keep things quite under control. We call it yield curve control, right? Where they haven't really...
So just to add to that, every country in today's time is hiking interest rates. Every country is taking interest rates to the highest possible level they can, because for some reason they think that hiking interest rates below the rate of inflation can kill the rate of inflation, right? But as we've seen in history, you have to hike interest rates above the rate of inflation to kill inflation. Obviously, the level of debt in the current situation, that's impossible. So what do central banks have to do in today's time? They have to force a recession, because that's the only way that I can get demand down and I can bring inflation down. Now, because of that macro setup, as Zach was mentioning, it just creates a lot of opportunity in the currency markets. Some banks, as Zach alluded to, like the Japanese central bank, they are keeping the interest rate artificially suppressed for some reason, and they are defending their bond market at 25 basis points, and they're printing money every day, which makes no sense. Eventually, the speculators are going to come in and wipe that peg out, which can have devastating effects on our markets and other markets here as well. But these are the risks that the world faces, and this fund tries to capitalize on those risks by taking advantage of it effectively.
So the bottom line is that given the current environment, the timing is very good to be trading in the Forex market because of this differences in policies across different central banks. And this is why we've introduced this fund also to our clients. Although it is quite high risk in nature, we do believe it can give you some really, really good returns. Any questions?
These funds that you have structured, are the funds locked in for a minimum amount of time?
No. So, John, I will take that.
Not necessarily, no. We're looking into that quite closely because some investors do get a bit patient and want to withdraw early. As it stands at the moment, it's not locked up. It's quite liquid to obviously move in and out depending on the fund. But having said that, I just want to also emphasize that these funds in particular are designed for long-term growth. I would strongly suggest that these funds are not here to replace income, or I've got 100,000 rand, I want to put it in this and I can pay off my car. I feel like that's the wrong, and I'm not saying you look at it like that, I'm just saying that's just the wrong approach to take. I feel like wealth takes time to grow, and a month-to-month approach, in my experience, hasn't worked. Because all of a sudden they pull out in a certain month, and the next month is the best month, and they're like, why did I put to come back in, pull out again, and the next month is going to be better. So you can never time this. You've got to look at it over the long term and just keep your money for a certain period of time and just give it a chance to grow. That's what I want to emphasize.
That being said, we do have about a 2 to 3 week notice period in terms of withdrawing your funds from this, which is usually quite short compared to other type of investments. There are no early withdrawal penalties or anything in that regard. Why that time period is because sometimes certain strategies, there might be a trade open where, for example, if it gets closed at that point in time, it could result in negative returns for that specific trade. So we give it a 2 to 3 week period. Sometimes it may be sooner, all depending on the trades that are open at that point in time. Any other questions?
So, as you guys can see, our love for cryptocurrencies or digital assets, we couldn't leave any stone unturned. And because of the spiraling innovation in the space, we sought to build our own digital asset management platform that allows you to buy and sell different cryptocurrencies, but also take advantage of different investment strategies. Like the strategies Joe had just spoken to you about, these could be accessed through this platform. They can be monitored on this platform, and this platform encompasses everything to do with these assets and how you can keep them, how you can accumulate them, and then of course how you can buy and sell. We also sought to ways to differentiate ourselves to other market players and other platforms, in the sense that we're not the typical exchange or P2P exchange. We're what we call a OTC counter, which means that you can trade any value with us at any time, 24/7, and we offer a white glove service to our institutional and high profile customers, so allowing them to take advantage of any amount of liquidity without any constraints. Next slide. Just to give you guys an overview of what our platform looks like. So on the top is one of the arbitrage dashboard. This allows you to monitor your arbitrage returns in real time. So as trades are placed, you can see those trades, you can see your value growing, you can see your portfolio growing, which is quite nice and user-friendly. At the bottom is a visual of your wallet balances. So these are all segregated wallets that are custody to you and segregated for you. All of our wallets encompass a custody solution, so they're covered by insurance factors and other security measures that are the best in the industry and leading standards. So you can jump onto our platform, you can easily deposit and withdraw funds at any time. You can hold your funds with us. At the same time, you can also lock up funds. So say you're an institutional client, a hedge fund or family office, you don't know where to keep your Bitcoins, you don't know where to keep your Ethereum. Therefore, you come to us, we keep it in cold storage custody for you, so that is safe and secure and can't be accessed, and it's easy to find.
I should also add something, just with the liquidity side of things. If I go today onto Altcoin Trader, which is a retail exchange, I want to buy 10 million rand worth of Bitcoin. I won't be able to execute a trade without much slippage, meaning that by buying 10 million rand, my trade will pierce through the order book, and maybe at about 2 to 3 million rand, I've moved the price of the exchange. As such, I've been filled at a lower price than what I expected, so my slippage will be massive. We basically, on our platform, try and eliminate that, because we find best fit and ask, with minimal slippage, in fact no slippage, and the lowest possible spreads, tightest spreads in the market.
So just to add to that, you're not trading with somebody else like an exchange. It's not an order book in the sense that there's somebody else trying to sell their Bitcoin and you're buying that Bitcoin. Like you know, for example, Altcoin Trader, Vala. Instead, you're purchasing those assets from us. So we have deep liquidity in the sense that we can offer you any value of Bitcoin, even 100 Bitcoin or more, and you can purchase that at even one price from us. So no effective moving prices and no slippage.
So guys, buying and selling cryptocurrencies is something new in South Africa, right? How we differentiate ourselves is simple. We cater for high volume trades. So our man up there that wants to buy 10 million rand worth of USDT, we can definitely cater for you. Number two is most of these exchanges don't necessarily offer you a way to grow your crypto, right? So this is where the alpha, the beta, and the arbitrage funds come in to now allow you an opportunity to grow your cryptocurrency or put your Bitcoin to work or whatever that may be, right? And thirdly is the concept about custody, right? So there's a saying in crypto that says, not your keys, not your coins, right? So what that essentially refers to is keeping money on exchange, although it's in your profile or in your account or whatever it may be. If that exchange gets compromised, your coins are gone, right? And a lot of people have been hacked by text messages and what have you. There's been a big uproar in the US about Coinbase, which is a listed exchange, about how they can essentially tap into their clients' funds when they experience an...
So can we get to that? If an exchange goes bankrupt, retail exchange, the crypto you have in that exchange are law. They have to take it because it goes into creatorship. You don't get it back from them. And I just find with the environment that we're in at the moment, it's very difficult to avoid the situation. With one exchange at least, perhaps an exchange files for bankruptcy because maybe they couldn't meet the obligations. So we come in and we can just...
Yeah, so basically what we offer in terms of this is, in simple terms, a digital vault, right? So like how you would put your Krugers in a physical vault here in Johannesburg or with your bank, we offer that solution for your cryptocurrencies, right? You guys might be thinking, okay, maybe it's cold storage or trezors and ledgers and what have you. For those of you that know what that is, for interest's sake, how many of you know what cold storage is? Okay, cool. So it's not cold storage in that sense, right? So we've got military grade security with regards to this. We've also got cyber insurance, which covers you against theft of hacking or what have you in the event that it does. It goes as far as to say that, look, if you are frequently sending cryptocurrencies to certain recipients, right? So say your business partner or your friend overseas or whatever it may be, you can actually whitelist certain addresses to send your cryptocurrencies to, so that, for example, in the event that a hack may occur or somebody compromises your account, your password or whatever it may be, it won't
Initiate the transfer.
yeah, it won't initiate the transfer without you whitelisting that wallet or what have you,
Right,
right?
putting in your two-factor authentication or some sort of.
Of course. So the point being is that BitWealth is not necessarily, well, it's not an exchange, right? We are an OTC counter. You're looking for crypto, we can provide it, whether it's small or high volume, right? We have that liquidity on our books, right? Secondly, you want investment funds, we can turn your crypto for you to essentially grow your coin balances rather than your fiat balances. And thirdly, it's a digital vault, a safe place to keep your crypto, unlike most retail exchanges. Any questions? Okay. Move on.
I think just to go back on the previous page, we partner with industry-leading partners, Circle being one of them. So our gentlemen out there, we are partners with Circle, where we give access to USDC directly. So all of our funds as well within our treasury are always converted into USDC, and I help with Circle as a custodian. And then I'm not sure if many of you know Kraken and Fireblocks. These are custodian solutions and tech providers to us. And of course, CoinCover, they come with the insurance factor that help us with our insurance and cybersecurity measures.
Okay, so finally at my part. I think the guys, my partners, covered a lot of them. Their side is more exciting than mine, but one of the most best things about my day is I participate in each part of their business as the treasury, as a group level. So let's, I just want to ask a few questions. Do you know what is a treasury, for example? Anyone? You guys have some? Okay. And
You guys don't count.
and I promised my partners I wouldn't make it a Ecos 101 lesson. That's business. But fundamentally, a treasury works as the lifeblood of the organization. And I participate both in the OTC counter, the crowd prop structure, as well as the funds. And with that, I lead the treasury and I lead macro research for the firm. So you would generally see me on the morning group posting about what is our macro view for the day, and you would see my articles on investing.com, and you generally see my opinion pieces as an economist in just on our general public socials. So just to dive into a bit, how many people in our audience have businesses? So like a few people with businesses. How many people know teachers or professionals working abroad? Okay, so like a few, and obviously the brain drain in South Africa continued, and so I'm just going to dive into what we created. I know we're running short of time. So we assist both individuals and corporates on a global structure, but something's quite interesting is we developed a global currency program. So I'm just going to stand up to explain it. With the program, I compared banks in South Africa. So a bunch of them, and I put them together. And do you know what they charge you on your forex spread as an individual, excluding private banking and private wealth? It's generally on average 1.2% on your forex, and which is ridiculous because when I spoke to a lot of teachers and professionals working abroad, a lot of my friends, obviously part of that brain drain, that went across, I started assisting them in the currency program, and obviously teachers working abroad in remote areas, they needed to send money back to help their, or sort out the liabilities in South Africa. So with that, on average, we generally saved them 219 Rand per transaction on $1,000, which gave them a good lump sum at the end, and they obviously accumulated that in money markets and invested that into other products, but also had a little capital at the end of the year to benefit them. So that was a bonus to them and working professionals and teachers abroad. Can you jump to the next slide? So on the corporate scales for the guys that own businesses. So business efficiency is one of the most important thing, and I'm sure you struggle with general bank efficiency, standardization of documents, fraud, risk management. That's a huge part of overall business. So this is where I step in, giving you obviously the view in the morning on our WhatsApp group to tell you where the rand is going for the day, and then we generally forecast forward cover for you. Obviously 3 months is generally maximum, and then we sort of, it's more accurate coming down to your spot rate on this case. So just some deal confirmation and settlement efficiency. Overall, we found ourselves slightly more efficient than the bank due to the personalized service. As Fadil mentioned, the white glove service is a dedicated consultant to you that generally advises you on your settlements, where your settlement is, how far along, and also giving you a bit of guidance from the dealing group to tell you, you know what, you should take forward cover here, the rand is blown out. And last year, we assisted quite a few SMEs, obviously with the transition, and we're really grateful to help the local businesses with over 200 million in cumulative transaction value. So that was really good, and really excited about that. And we continue to grow, so assisting businesses with the complications of SARB as well. I love, hopefully no one's on the SARB here. But I love talking to the SARB and working our way through exchange control to assist you on that. So from a macro viewpoint, I sort of write articles on Singapore levels, finding you the best rates, but working at the back end to have the smoothest efficiency overall for your experience. Just want to get to the next slide. So overall in growth and where I see our view, so both my hands are in decentralized and centralized treasury, and what I call treasury 4.0, and that is actually migrating what is a traditional treasury into a space of DeFi. So obviously digital yuan has come into play, and CBDCs. So I would definitely put up my article which explained the whole idea of Terra Luna, as well as the debt spiral, as well as how that sort of process worked. Really broke that down for the general individual. So the global structure is we take traditional treasury, but we take that institutional level treasury to the SME. So meaning that you have the option to hedge, you have the option to forecast, cash management. Those are goals in which we give back to the SMEs to grow their business overall. From the DeFi side, we're really focusing on smart contracts, really working on custodian, tokenization, regulation, which is a huge space, and also the payments hub, getting money in and out. Obviously, BHP Billiton in June last year did their transaction to digital yuan. So we really want to get into that space where we're sort of working with the South African Reserve Bank to move payments faster, but also give you that decentralized option as well. So that's good from my end. I don't want to keep you guys too long, but always happy to have a conversation with anyone. Yes, question?
How do people register for your newsletter?
Awesome, yeah. So the newsletter, I will put so everyone that signed up, I will send you a link to that. So feel free to sign up there. It will send you articles from investing.com. And as well, you can use the QR code and sort of view our websites, and don't forget airdrop edits. That will be done today. But any questions with just regards to the treasury side, macro research?
So guys, I just want to thank everybody for taking the time and coming out today. I also just want to touch on one point, is that there could have been a lot of words today that maybe we didn't necessarily understand, or concepts that are quite new and daunting, right? But in South Africa, we have a culture where, for example, you go to your financial advisor to ask them where to put your money. And the problem that we have is that these financial advisors are literally incentivized to sell you products that yield you virtually nothing, right?
That's why I use Wealthface.
So where we kind of see ourselves differentiating from that is, you'll see a lot of our products, as you guys have seen today, are quite innovative and stuff in the way that they are structured, right? But the bottom line is that if you are an investor looking for a diversified portfolio, whether you're looking for property, whether you're looking for equities, cryptocurrencies, forex, money markets, bonds, whatever it may be, we can provide that for you, right? And we encourage all of you to please reach out to us, or find the time to meet with us, whether it's for coffee or whatever it may be, and let us understand your current financial situation and how we can assist you in terms of growing your wealth, as well as achieving diversification. So thank you very much, everybody, for coming. As Shabir mentioned, we will be giving out a free NFT. The point of the QR code is essentially to set you up with a wallet called MetaMask, where you will receive that NFT. Please know that downloading the wallet is not enough. We will need your wallet address. We ask you to please copy that and insert it into the NFT form that you will get through the QR code. Thank you very much. We appreciate it.
Don't give a shit.